Adiel Gorel has helped thousands secure their retirement riches. Even the great Warren Buffett wrote him needing to know more. The answers are all here for you. Welcome to the Remote Control Retirement Riches Show.
So a question that I got on social media is, how can you make the most of depreciation over time as your property loan goes down and your cash flow increases? Once again, this is really a tax question. I'm not a CPA, but I'll give you a layman's person and check this with your tax person. So depreciation is another incredible gift that we get in this incredible country called the United States of America. Doesn't exist in many other countries. Depreciation, basically, you bought a home that could very well be appreciating in value as the years go by, with inflation at least, but for tax purposes, they let you depreciate it as if it's some sort of a machine with a finite lifetime, and that depreciation loss is actually a tax deductible expense. Whether you can use it on your tax return this year or not depends on what your income was. There are certain limits beyond which it will not be able to be used this year, but it will carry forward as net operating losses into the future. I believe that threshold is $150,000 a year, adjusted gross, but please check with your tax person because the laws might have changed. Even if you can't use the depreciation losses this year, as I said, they will carry forward as net operating losses. In the future, let's say you sell a property, before you start paying taxes, they take all the net operating losses to mitigate the gain. So you're still using it. By the way, depreciation when you sell a property gets recaptured. They call it depreciation recapture. So still, I think it's a great benefit because if you can use the depreciation losses, you use them now in the expensive dollars of today, and then years and years from now when you sell the property, they recapture the depreciation in the cheap dollars of the future. But again, this is a pretty big subject. Talk about it with your CPA. We invite CPAs to our quarterly events, but depreciation is useful, and whether your loan goes down in time or not doesn't matter for the usage of it. And there is another thing you may want to keep in mind. One day, when you are very old, maybe 160 years old, and you decide to pass away, in this unbelievable country, once again, sorry, there is something called a step-up basis. Look it up, like stepping up on a stair. And on the day of your death, the basis of the property to calculate your taxes goes up, it steps up to the value of the property, so your heirs, unless you are incredibly rich, will actually get it with no taxes. Too much to talk about in a simple answer. You can look it all up or get in touch with us at info@icgre.com as to how you can make use of your depreciation over time. Thanks for joining me today. Click the subscribe button for more video on real estate. Got a question or comment? I love questions and comments. Leave yours below. And here's another video you've got to see.